Yo, what's up guys? This is Bart Bregman here from Toro Demo Trading.com. Today with another trading basics video for the eToro platform. And yeah, we built a new article about stock patterns. Even when you do only the copy trading on eToro, so we speak, it's very important that you know stock patterns. For example, if you go into a single asset like Bitcoin, for example, it's very good to understand the trading basics. These patterns are relatively simple to understand, but not many people know them, and it's very important to know these patterns. So we're going over to them one by one in this video. Just log into your eToro account. And once you're in your eToro account, first always switch to virtual trading because I don't give official trading advice. It's only my opinion because of legal reasons. All right, so we're gonna select Bitcoin here for a second, and then we go to charts. Now, what many people don't know is when you switch open here, you get a lot more chart functions. All right, so Bitcoin, if we go back here to our article, the first pattern we're going to have is triangles. And triangles are very common and are a very helpful tool to spot price action in the market. Now, at the current moment, we have Bitcoin at 18,000, near the all-time high. And what the beautiful thing is, we can even draw a triangle here as well, because if you look at it this way and then one like this, you can see Bitcoin is creating a triangle. If we close it up like this, and that means that the price going upward, downward, upward, downward, upward, downward, and like this. And that means price is going up and down, less volatile, until it comes either breaking down on the upside or the downside. And usually when it breaks that specific trend line, that triangle box that we created here, that means the price will significantly drop very hard. Now, I predict Bitcoin will go to 15,000 at this moment, but that's for another video. Anyway, let's find another example. So here in Bitcoin, we have a much smaller triangle. But this triangle pattern is a very common thing that has been used by technical traders. And so when you're buying a stock or, for example, Bitcoin, try to be aware and try to spot these patterns, because when you're buying it on the wrong moment at the wrong time, you might set yourself up for a big loss. As you can see here, Bitcoin made this triangle pattern here, and then it's stopped becoming volatile, and then it cracked up to the upside. And guess what? You could have made a very nice return here. So try to spot those triangles. They're very helpful. They break or to the downside or to the upside. And yeah, sometimes there's a fake out as well. It's called a fake out, but that's also for another video where we go deeper into this. But yeah, it's a very helpful tool that can help you in your trading when you're at the moment of buying a asset. Then the next one in the list is cup and handle. All right, so the cup and handle, I had to find another time frame a little bit. Anyway, the cup and handle is very simple. It looks like a cup, and then it will go down a little bit for making the handle, and usually it will shoot yourself up there for the upside. And this is a very common pattern in the stock market. And traders also use this as an advantage to see, hey, oh, there's a cup and handle forming, and let's try to make some profit. And the more traders go in that specific moment, the harder the price goes up. So then it becomes a self-fulfilling prophecy. So the cup and handle is a very easy to spot. This is a very good example here of this image. Very easy to spot pattern. So moving up to the next one is the head and shoulders, because you can basically put a head here, and then he has two shoulders, and then it's a happy man. And other way around as well, we have here the head and the two shoulders. And this is also a very, very common pattern to scout for in the market. So let's see if we can zoom out and find one. All right, so here we have a head and shoulders, and these patterns we're talking about are not always perfect. I mean, they're not always as beautiful as we describe them, but this is going up, down, up, oh, to the high top, down, one time more up, and then down, and then usually the upside head and shoulders will break to the downside, and the inverse head and shoulders will break to the upside. So when you see in head and shoulders forming, and you think here it goes up, but it goes down like this, try to be careful, because as you can see here, it did break very heavy to the downside. So that's an important pattern to scout for, because all the traders are looking at these patterns. Even the big institutions, they take these patterns in their algorithms to scout for. So it's a very important to scout for those patterns. All right, so that will bring us to the next pattern. That will be the double top or the double bottom. All right, so if we look at the current situation of Bitcoin now, it came 2 times to the same all-time high. And what we call that in trading is a double top, essentially, as well. But of course, we have smaller double tops around the way as well here. You can see this as 2 double tops. But these are 2 really big ones over a very long period of time. But basically, because you can draw a line like this, and that means that at the same point, the people thinking at this specific point, all right, this is the maximum price, we're going to sell. And here as well, this is the maximum price, we're going to sell. And that creates a double top. And that is a very common pattern to scout for. And also for going to the downside, you can say that here as well. Here you have this long rounded bottom, more or less. And we have here the same price. People say at the same point, okay, this is the reverse moment where we're going to buy again. And that is basically essentially a double bottom. We have this also a triple bottom and a triple top. It's basically when the price reaches 3 times the same support and resistance level. We're going to talk about that in another video, but be aware that when a price comes to those same levels, it can happen, as you can see here and here and here, that it happens that it goes 3 times at the same price point before it reverses again. And what that does, it creates a channel. And channels are also very good indication of the market. Now, let's go to the next one, is the wedge, which is similar than the triangle. So a falling wedge or a rising wedge is more like a channel based at going upwards or downwards. And Bitcoin, you can see this very, very good here now. So the price movement goes up, and it very slowly creeps up in this very small wedge channel. And this is unsustainable because people are slowly buying. At the moment we have no volume here, but usually the price action stops moving and people stop trading, because it's an unsustainable trend. And what usually happens with a rising wedge, because this is a rising wedge, after a certain period the price will fall down and break this level here. So what that happens when you see this happening, try to be careful, because usually the people try to buy in because they think it's going up, but be warned, with a rising wedge, it's very likely that the price will fall down. Some people also call it the dumb money. So if we go back here a little bit at Bitcoin, you can see here, this is a nice falling wedge channel. And as you can see here, it broke it, and then it went to the upside. So this was a falling wedge. Usually a falling wedge reverses to the upside. So that's a very short term. I would say this is a shorter term pattern that can be used for trying to identify not to go in, or when to sell if you're not confident about the price movement. So it's a very important an important pattern to know. Then flags is basically the same as a wedge, but what it does, if you have, it is a very good image about flags. And basically what you have is a falling wedge or a rising wedge on a pole. And because you can basically make a flag of this pattern here by paint it out like this. And these are very, very bullish patterns. Bitcoin tends to make these patterns a lot because you can connect this flag on here. Oh. And it's every time it's a breakout from a falling wedge, and then it connects to the next one and connects to the next one. And try to be careful because it can also create a rising wedge, and that usually is the end of the trend. And but bull flags are very, very, very important to look for when you try to trade a market. Then the last one is the rounding bottom, and I can show you that at Bitcoin as well. So here in Bitcoin we have a very nice rounding bottom. But try to be very creative with spotting these patterns, because as you can see here, this could be a triangle. And if you can look here, you can even see a very small bull flag. And if you would say this could be a falling wedge as well, and then it broke at this point. So try to connect these patterns together. Even if you want to go really crazy, you could say even all the way over here, from all the way over here. If you connect this triangle, you could see, hey, this is a really nice point for buying the Bitcoin. So, and everybody tries to look for those patterns. Of course, now the whole thing is becoming a mess because there are lines everywhere. But try to connect these double bottoms, head and shoulders, and rounding bottoms. Try to connect those things together, and you will. It takes some practice, of course. That's why we always say go on the virtual account and try to practice spotting those patterns while you're trading. But they're very, very helpful tools, and hopefully this made you a better trader. So I hope this video was a little bit informative and helped you to become a better trader, because every day a little smarter you will become a better trader. Okay, thank you for watching. Keep practicing on the demo account, and see you in the next one.